Monday, January 6th, market analysis. Stan Ehrlich, good morning. I start out with stock indexes and go to futures, and sometimes I'll go to cycles or seasonals, which is similar, or other features that the market has to offer. The Santa Claus Rally has finished. The last offset was this morning, and it made money again this year. Not much, but we'll go into details. The E-mini daily data chart has a very strong rally in progress at the moment, relatively near the high of the day, and now a new high for the past 4 days, and not far from a new high for about the last 2 weeks. And if we can get above, 61.08 or so, then we're automatically going to be close to a new high for the whole trend, which, as I've said for weeks, is my expectation. I thought it would happen a little bit sooner than this, but it's on its way, in my opinion. Now, we are not anywhere near overbought, so we got plenty of elbow room on the upside. Now, let's look at the 5-minute chart. Momentarily, we're having a little setback, but here is the Santa Claus Rally. Now, the first entry, 3 days, trading days before Christmas, was on Friday. I believe that it was the 20th, the 19th. And yep, we got a very good, relatively low price and relatively good entry for that particular day. Closed with a nice profit. Second day, we got an excellent entry and it closed with a profit, making about as much money for the first entry, and the second one was profitable also on the close of business on that Monday the 23rd. Tuesday the 24th, the entry wasn't quite as good, but it closed with a profit again. Now, as I've said in my earlier recordings, I had a profit on all three trades on the close the day before Christmas, and my shortcoming, or the shortcoming, not necessarily mine, for the Santa Claus Rally is nobody has ever mentioned anything about money management. They only basically say buy it just before Christmas and sell it early in January or the beginning of January or something vague like that. For you people, I pinned it down to the exact 5-minute or 1-minute mark on the date, period, in advance. So we exited on the first trading day of the new year, which is January 2nd. And there's our first exit right there with a green trade line right here. And it made money, good money. And I'll show you the details on the SPY in a moment, because this is actually a spider, not E-mini trade. Now, the second entry lost a little money, and also the third one lost a little money, but not much. Okay, let's go to the spider. You can see the SPY gapped up this morning. Now, traditionally, gaps are almost always closed. The implication is that this is going to come back down to 592.5, maybe this week, and no holidays this week, full week, and continue to work its way higher after that. But since gaps are almost always closed, you have to look for that and kind of expect it. I'm not saying it's topping out today. It may go up a little bit more and then come back down to that 92.50-ish and then proceed to go higher. That's my expectation. Here we have the short-term chart and the actual Santa Claus Rally entries for the SPY. First trade, green trade line, good, made $401. The second entry, 2 business days before Christmas, on the 23rd of December, lost $25. Very small loss. The third exit was this morning, again at 6:50, and it lost $64. So the two losers combined are not even 100, and the profit for the whole Santa Claus Rally this year was $312, and that's for the 2024-25 Santa Claus Rally. Now, history in the books. Again, another profitable Santa Claus Rally. Great. Now, I may have lost more or made more, one or the other, in the other indexes. They're not going to be exactly the same, but I've been researching the October lows in Santa Claus Rally based on the SPY for decades. All right. Now, QQQ this morning, gapped up. Gaps are almost always closed. So just like the SPY, expecting a little bit of a retracement here. On the 1 minute, 5 minute chart on the SQ, on the QQQ, we have obviously this big gap, and we haven't made new highs for 10 days or more, but it is a new high for 5 days. 1, 2, 3, 4, 5. Yep, good. On the NASDAQ, there is no gap. It is a futures contract, so it trades almost 24 hours. And that lends itself to very few gaps. So it'll come back down to around today's lows if the other indexes retrace to close the gap on the QQQ and the SPY. So here's the 1 minute, 5 minute chart on the NQ. And it's made new highs for about 4 or 5 days like the others, and deserves to have a little bit of a downside retracement. But none of these are overbought. Daily data, only around, the 55-ish. The daily data on the QQQ, 58 RSI. Nothing overbought on the daily data. That's when I get very concerned about a market having a high and having some sort of bearish retracement. But that's not there yet. On the YM daily chart, we're even less overbought at 51 at today's rally high, and only made new highs for the previous 4 days. So this is a new high for 5 days, but we double bottomed out here in oversold conditions in both cases, with a bullish engulfing on December 20th. Now, it didn't turn out to be the exact lowest low for the bottom. Unfortunately, it was a slightly lower low back on January 2nd. But there was still a 1, 2, 3 day very nice trade after that bullish engulfing. I should show you the 1 minute or 5 minute, I keep saying that, chart. And we're just simply having a little minor correction, in my opinion. The Russell, we have a new high for 2 full weeks. And we're not overbought. So I'm not going to be surprised if we are still going to have significant more rally here before it gets overbought and has some decent downside correction. We sort of double bottomed out. The first low was very significantly oversold around 13. And the next time down, we did not make a lower low. So this looks like a little double bottom over about a week. And we are breaking out of that to the upside today. Hopefully going to close above 2305. And we're close to 2300.8, almost 2301. So that would help. And the minimum upside objective, you measure from the 2 lows to the highest high. And I'm just going to eyeball it, something around there, 2373, give or take. That's just a educated guess. I didn't actually take an accurate measurement. Next, Russell 1 minute, 5 minute chart. Doggone it. Not a new high in the last few minutes. Hanging in there pretty good, though. Very optimistic about higher levels. Now bonds. Doggone it. This darn thing won't bottom out and head higher and stay that way. I'm very frustrated. This is a new low for the whole trend in bonds. And I'm getting ready to abandon this gigantic long-term head and shoulder bottom formation. We are dropping down below a couple of times now the old neckline on the single shoulder pattern. That's not supposed to happen. When it did it here, it bounced off of it. And when it did it in here, that was okay and bounced off of it. This was supposed to be in October, timing-wise, for the low. It happened in November, but it didn't hold, and here we are substantially lower. Now, I do see the interest rate futures creating a long-term bottom formation in some way, shape, or form, but I can't pin it down at the moment. And probably this week, if we don't see any kind of a very radical rally, I will eliminate all of these markings for the head and shoulder, whether it's the double shoulder or the single patterns, and go back to the drawing board, so to speak. Now, 10-year notes bounced off the neckline, did give us a bullish engulfing at the bottom of the move exactly. There's nothing wrong with this chart except the timing for the last low is again about a month and a half, 2 months later, I should say, than what I was looking for. So I'm going to grab this marker and swing it over here and also raise this end of it so it's a little higher and it looks a little bit better. There we go. So this could be the last shoulder low, and of course bonds will follow if that's true, but it's not behaving nicely. We are still attacking previous lows. I can see we're bouncing back a little bit at the moment. That's nice, but we're not oversold. The trend is down recently, the last few months, and only major support plus a bullish engulfing plus the old neckline have worked well here so far. I like that. I can't go bearish here. Everything seems to be okay. It's just not working out accurately in the bonds. Notes, yes. Looking for a lot higher notes. Crude bumped right up against the bear trend line. Perfect. This is a very large pennant formation starting really May of 23 for the bottom and the top about September 23. So it has been active all year long. I don't think this line is particularly relevant anymore. I'm going to erase that. The support area has been holding extremely well. But now what? Hey, we're lower on the day at the moment. We are overbought for 3 days. We touched a major bear trend line. These are market features that cause me to believe that we're about to turn back down. And I think it's going to turn back down to at least 71 and very plausibly 65, 66. Wouldn't be surprised. I'm trying to justify turning bearish. If we get below Friday's low, we'll have a bearish engulfing ER sell signal like that one, which worked very nicely. This one didn't work particularly well, and we haven't had a lot of these in the crude lately. So what about heat? Overbought. Not much else about this price level that we got up to, and it's a new high for a few weeks, a couple of months, I should say, 2 or 3 months today, but it's back down to unchanged right now, basically, and it's overbought. So if we get a little bit lower, we're going to end up with a bearish engulfing red sell signal. The longer term trend is obviously down in this downward slanting channel. So this could be the beginning of an attack of the lowest lows since September. Wouldn't be surprised. We got a little bit of a support area here to try to bounce off of, but I've got a lot of faith in it. It's not very particularly important as far as I can tell. So watch out. We might be turning down on heating oil and crude because of the trend line overbought conditions. And this is a very, very overbought 85 on the crude. Heat, not so much so, but 82. Natural gas, different story completely. We have a head and shoulder bottom. The shoulder low is late August. The bottom of the formation was November 4th, and itself, over about a 1-month period, was a small head and shoulder bottom that worked great in 4 days. It came and went. But that small one during middle October, middle November is the head of the bigger one. And the last shoulder low, of course, was early December to the middle of December, has worked, came up to the neckline, broke through it, got all the way up to about 402 almost. And my minimum upside objective is 4.468 or higher. Yeah, Friday, we came down almost exactly to the neckline. And maybe that line is actually a little too high right there. I could see I have it a little too big, a little too high. And if I reposition it, it might have been a little more exact. And that's not a big deal. But touched the neckline and now has made a new high from Friday's high already and up very nicely and hanging in there. That was an obvious perfect touch of the neckline. And I believe in some detail, I told you that was a spot, if you were gutsy about it, where the risks were low and the rewards could be very, very big. And they just started. Not that I'm recommending chasing markets. I never like that. People do that all the time. Never, never, never chase a market. Pick your spot, make your trade. If it doesn't work, don't take a big loss. Make sure you've got your protective stop loss order in at a manageable level. You might have a variety of losses in a row, but your upside objective should be significantly larger than your risk factor. Let's look at gold, silver, platinum, copper. Gold market starting to dip a little bit. Middle RSI levels almost dead on 50, not quite. Sideways for the last, with a little bit of an up move, 2 or 3 weeks. The bigger picture is this very awkward looking head and shoulder top, not acting quite normal, taking too much time for it to go down and break the neckline, which is very downward slanted, not normal. Excuse me. And I'm a little skeptical about this pattern. If we do start to drop below 26 very quickly here, then I'll say, okay, it went sideways more than you'd expect. But the body parts are there. We got the shoulder, we got the head, we've got the shoulders, we got the neckline. It's just acting weird in the last part of the formation. Now, silver's doing about the same thing. It's bouncing off the neckline. It shouldn't do that. It should come down to it, maybe bounce a little. Second time down, that would have been the downside breakout, which it didn't do. And I'll put my little measuring stick over here now. So it's got to come down real quick. And today is an outside up day. Implication, if it stays higher than the previous close, bullish, friendly. I don't like that. This is not, again, acting right. This is acting like the head and shoulder top, which is already substantially lopsided. We got a bearish engulfing on the high of the last shoulder. That's great. But this is not good that it's rallying like this. Well, how about platinum? Well, doggone it, it's the same thing. We came down to the neckline. We tried to break out to the downside. It didn't stay below the neckline, and immediately, late last week, started to come back up way above the neckline. Not just a little bit, but way too far on Friday in particular, and again this morning. So unless there's an immediate collapse here below 900, this pattern is very much in jeopardy. It's the parts are still there. It could work. I just don't like the fact that it's taking way over a month to do what they normally do. How about copper? Well, it came down to support, broke a little bit below it, got oversold. And now all of a sudden today, jumping right up to the top of that little resistance area and threw it like crazy. This is looking friendly. Looks like you've bottomed out. Looks like it's a little bit lower than you would otherwise expect. But the minimum rally amount, I think, would come up to 4.3, the previous high couple of weeks ago. And I can't rule out something along the lines of 4.4 and a half. Looks pretty good. Oversold conditions, broke support, but it's kind of like a ping pong ball being pushed underwater and popping back. So I'm friendly to copper. I don't have any particular objectives other than what I just mentioned. What about soybeans, soybean oil, soybean meal, corn, wheat, and then cattle, hogs, and we got a stock to look at. This is doing real well, the stock. Okay, soybeans. Doji inside trading day. Will it break support and continue to break down below 950 and make new lows for years? I can't rule it out. Major bear trend line stopped the rally, got close to overbought but couldn't stay there. This is a little bit iffy, but I have to go with the flow, and the flow is down. The trend is down. So I'm looking for support to be tested and taken out. Soybean oil couldn't do the job on the upside. got up to the highs of the last couple of weeks and is a little higher on the day today, but still in the same trading range. And the trend is your friend is down. Now, yeah, I see this pattern. It's possible that this is a big shoulder in the last 3 weeks, and that'll match up with the beginning of May of this year. The head of the formation is always the highest high or the lowest low, and that would be the outstanding August 16th bottom. So the neckline is right up here if this starts to rally. But let's talk about it when it starts to rally up. Otherwise, this is not really getting off the ground yet. I got to get a close above and probably well above today's high. Otherwise, neutral and look out below. How about meal? Banged into resistance, got overbought in the process Thursday of last week, turned around on Friday, dropping to new lows for previous 4 days. All of a sudden, a little bit lower on the day at the moment, basically unchanged, a doji, and I don't know. I'd love to come up with some really bullish, great ideas that are continuing to work out well. But this broad double bottom potential is now looking like it could be in jeopardy. Small gap to close right here. Not that big a deal, but can't forget about that. We'll keep an eye on that. Not oversold, not overbought. We were overbought at the resistance level and down we came. Next, we got the corn. So we got overbought, got a bearish engulfing. It made slightly higher highs, unfortunately, but not much. And I keep telling you, these bullish and bearish ER red and green daily bars are as well as frequently the bottom of breaks or the bottom for major moves on the upside. And sometimes they are part of the topping out or bottoming out process and not the highest high or lowest low. So this could have been part of, but hey, we're up 7.75 and close to the rally highs. That's not neutral or bearish as far as the current ticks are concerned. So I'm going to wait on comment on meal or corn. I meant corn. Wheat. Come on, wheat. Well, obviously the trend is down. It's gotten below the previous bear trend line again on Friday and actually made a minor new low for the whole damn shebang, going way back to the war. And then we got a sell signal, my most incredible in decades, at the top of the market on March 8th for wheat as the war was beginning. Most people think that when markets all of a sudden have fundamentals that are normally bullish, if you have been going up already, which is not uncommon at all, very common, and you got very overbought, when the actual event takes place, the market has anticipated the bearishness and already added to its value that bullish move. And in this particular case, now it could have had a substantial downside correction and then kept on going up more. But in this particular case, that was it. All she wrote, and it started to trend lower, obviously, and has been ever since. So looks like wheat, in my opinion, is going to have new lows for the trend soon. Okay, cattle. Overbought, second day now, pretty decently, 81. I'm looking for it to turn down, but it's going to come down to support, hold, turn around, and go back up. That means it's going to come down to around 190, and I can't rule out something around 83, 183, 182, but I don't see the overall trend changing at this point. Hogs, the exact opposite. We're down into support. We have an oversold market for 4 days, today being the fourth, and I would expect it to turn around and start to rally very, very soon. Okay, this is the SQ. This is a stock. And what have I got here? Something I didn't want. Okay. Look at this. A small head and shoulder top, which wasn't the best I've ever seen, did start a move down, was bottomed out at 84.84, $84.84, give or take a little, and almost got to my minimum downside objective of about 82.5. But now we have seen it come back up dramatically with the overall market. It did gap up, so we could come down and close this gap. But I think that could be a good buying opportunity around 87.57 and then continue to work higher. I said almost always closed. Gaps are not guaranteed to be closed. In this industry, this market analysis stuff, there's nothing, hardly anything that's guaranteed. So, all a matter of interpretation. Unless you have an automated trading system with a track record, I think you can feel comfortable that it'll hopefully, but not guaranteed, continue to work as it has before. But you don't want 10 or 20, 30, 50 trades or even 100. In my track record, I got 4,000 ER1 scalp for 2 years, and it's just going straight up very, very steadily. All right, so back to the E-mini for a moment. Let's see about the 5-minute chart. Fiddling around here on a little bit of a dip. Don't see anything wrong with this, frankly, bottoming out. Ooh, okay, we just got a 95 hit on the 1-minute RSI chart, 5-minute no less, 5-minute chart. This looks like it's about to turn up. Now. Or it started 5-10 minutes ago, actually. Yep, that's about right. We'll see what happens. You guys have a great day. Happy New Year's to you. Excuse me, and profitable trading to you.